What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I have planned for y'all today. We're going to be dropping another episode in our Creative View series. Now, Creative View is a place or is a playlist that I'm going to be using in order to break down different algo indicators, right? Being able to break down machine learning, how that works at the very basic micro level, and also being able to break down different AI agents, different frameworks that they use, which LLM makes more sense to use, large language model. But today we're going to be going over Bollinger Bands, right, and how that makes sense and how you can use it for your different algo strategies, right? So we're going to jump on right in to being able to understand Bollinger Bands and how it makes sense for how you can use it for your strategies, right? So excuse me, this course is going to teach us through charts and visuals. We're going to see the pattern first and understand it second, right? So this is a live look at Bollinger Bands for the last 60 days, right? And we're looking at it from the S&P 500 or SPY. SPY is the S&P 500, the top 500 companies within the New York Stock Exchange. So when you look at the Bollinger Bands, right, there's going to be three lines in the Bollinger Band. We're going to have the current price, right, which is the 694.07. Then we're going to have this upper band here, right? The upper band is going to be our overbought territory. This is where we're going to see individuals panic, FOMO setting in, right? Individuals want to be able to get in to an underlying asset and they don't want to miss the move. So whenever you have the price stretched over the upper band, this is going to be our overbought territory. And then we're going to have the middle band. The middle band is going to be our moving average. This is going to represent what the price has been over 20 periods, right? That's on average. That's the standard when you're talking about the Bollinger Band. So the upper band is going to be where the price is overbought at. The middle band is going to be where the price has the average, and the lower band is going to be where the price is oversold at, right? So panic is setting in. Individuals want to be able to get out of their positions a lot quicker than what they see. And we're actually going to look at it on an actual live chart in a bit here, but I want us to be able to get that context of the lesson, right? So position, we're in the overbought zone, and then the bandwidth where it's super tight and it's about to squeeze, right? So the last 10 days, we can see that for SPY has been in the upper, if not the middle of the band, right? So this is a live look of SPY using the last 60 days, right? So here's another depiction of how it look. Remember, I told you that upper band is going to be the overbought territory. This is where FOMO is setting in, right? Individuals want to be able to get in before the price sets down. This middle line is going to be our moving average, and we're using a 20 SMA. So we're using 20 minutes in order to get the simple moving average of the price, right? And then the lower band, excuse me, is going to be our oversold territory. So this is where individuals want to be able to panic sell, right? They're thinking that the market is going to go down. So then when it reaches here, we're in oversold territory. So upper band and lower bands, we already talked about that. So here are the three components of the upper band, middle band, and then the lower band. Distance on volatility, which 2 standard deviations, and then the lower band distance based on volatility, and again 2 standard deviations. So we talked about that. So now let's go ahead and go to our quiz. The middle band of the Bollinger Bands is always the same price. That's funny. A 20 period moving average, right? Or is it going to be the highest price of the day? Now, just looking at our bands again, right? We talked about the upper band, and the upper band is going to represent the overbought territory. This is where FOMO sets in. We have the middle band. The middle band is going to be the average of 20 periods, right? And normally what's going to be used is a 20 SMA. And then we have our lower band here, which is going to be our oversold territory. This is where panic is setting in. So to answer our question, we're going to go ahead and say B. All right, perfect. When you see the bands getting wider, what does this mean? That volatility is increasing, volatility is decreasing, or the price is going up, right? So let's go look at it on a live view. So this is the Bollinger Bands, right? Bollinger Bands, I'm looking at it on QQQ, and QQQ is the top 100 tech companies within the New York Stock Exchange. So to be able to get a real view of it, right? We see here when the price is going above it, as you see it right here, that's letting me know that we're in overbought territory, right? FOMO is setting in. When the price is touching below it, right, as you see right here, it's crashing through the oversold levels, right? This is panic is setting in, right? You see this big body bar right here. It's like a BBL. Sorry. So you see this lower band right here, right? So we're seeing that we're in oversold territory, right? Panic is setting in. So whenever we see the bands get a lot wider, what we're seeing is volatility, right? We're seeing volatility increase. Either it's going from the lower all the way shooting up past the upper, right? So let's go ahead and go back to our questions. When we see the bands getting wider, we're seeing volatility increase, not decrease. We're seeing it decrease when it gets a bit tight, FM. All right, wider bands equals increased volatility. Narrow bands equals decreased volatility. So the price is touching near the upper band of the chart. What does this mean? The price is in the lower range. The price is at the extreme high relative to the recent range. The bands are squeezing. So the price is doing what? It's touching the upper bands, right? So when the price is touching the upper bands, as it's doing right here, what's this letting me know is that, all right, we're in overbought territory. We're in FOMO is setting in, right? Individuals want to be able to get into QQQ before it drops a little bit. So what I'm seeing here is that the price is in the lower range. So it's not that, right? When it's in the upper bands, it's overbought. So the price is above the 20-day moving average. The price is at its extreme high, given relative to its recent range. That may be interesting. Or the bands are squeezing. So let's go ahead and put B. Oh, look at that. We got it. Now we're going to be talking about the Bollinger Band step by step. The step one is going to be the middle band, right? So this is just the average across 20 days. And here is how the chart is going to look. The middle lines is going to be the SMA. Step two is going to be the standard deviation, is how far the price typically deviates from the average. And the average we're using here is the 20 SMA. So the current value is that the middle band is 685.26. The standard deviation is 1121 if we're using two standard deviations. This measures how much the price typically swings away from the average. Step two is going to be the upper and the lower bands. The upper band is going to be two standard deviations, right? From the 2 times the 1126. Right, and this is our upper band. This is our where individuals are like overbought territory, right? And then we're going to have our lower band, which is going to be 674. So the complete band picture is going to be our upper band with our 2 standard deviations away, and then the current price, and then the middle band is going to be the average, and then the lower band is going to be that same 2 standard deviations away from the middle band price. So here's the position view without the throughout these past 10 days, excuse me. So as you can see here, we've been in the average, right in that middle zone these past 10 days. So here's a view of all the SPY again, the S&P 500. So as you can see here, these blue lines, these blue dots represents the price. So as you can see, we did touch that overbought territory a little bit, but it's kind of been hanging around in the average. Statistically meaning, in the normal distribution, 95% of all price action stays within 2 standard deviations of means. That's why we use 2x, right? The bands adapt to volatility automatically. So high volatility equals wider bands. Low volatility equals more narrow bands. So the standard deviation in Bollinger Bands measures standard deviation. It measures the average price, how far the price typically deviates from the average, or the highest priced. So we already discussed that. We just discussed that. The upper band equals the middle band plus blank standard deviations, right? Remember we just discussed that. Remember it's going to be 2 standard deviations. So the standard deviation is 2. This captures 95% of all price movement. So when when volatility increases, the band does what? It gets wider. Not really, because volatility is expanding it. So it gets wider, not narrower, excuse me. It gets more wider because it's expanding apart. All right, so let's go ahead and jump into our next lesson. Is being able to read the bands on a chart, right? So what I want to do is I'm going to drive the boat for this lesson, because this is why I love using Bollinger Bands every single day, right? So again, I'm looking on QQ. I'm looking at QQQ, and this is the top 100 tech companies within the Nasdaq, right? So the red bar is going to represent the sellers, and then the green bar is going to represent the buyers. So sellers are the bears. They want to be able to push the price down. And then the buyers are the bulls. They want to be able to push the price up. So the reason I like using Bollinger Bands is because one of the adages that I've noticed, that no matter what, right, no matter if the price, and let's go back a little bit so we can actually like understand and really get this point across, right? Let me start right here. Right. So we're seeing that the bands are at the lower bands, right? It's getting to overbought territories, right? So one thing about the Bollinger Bands, that the reason I like using it is because it illustrates the fact that no matter if we're overbought, right, or oversold, excuse me, right, the price always goes, majority of the time, it goes back to its average, right? Even if we're oversold, right, and then it just hangs out here in its average. Even if we're overbought, right? What does it do? It goes back to its average. It's oversold. What does it do? It goes back to its average. Even when it gets super tight, right, and it wants to expand, what does it do? It goes back to its average. So the reason I like to be able to use Bollinger Bands is because, number one, it allows me to be able to gauge real time if the market is overbought or oversold, and also to be able to depict the fact that, okay, no matter if a price is being able to expand upwards or downwards, we can expect it to be able to go back to its average, right? So when it comes to using Bollinger Bands, I primarily use it for mean reversion strategies, right? Because even if a price snaps, goes up or goes down, what is it going to do? Revert back to its average. And Bollinger Bands allows us to be able to see this in a clear depiction. So this is going to be our last lesson, and I want to keep this video super short so we can understand how Bollinger Bands work, get in, get out. And I'm not going to be creating a back test for this one, and I'm going to be doing it with another video coming up soon. So let's keep going. So overbought conditions, the price is extended above the normal ranges. Common action is look for reversals from a slowdown, right? So we just talked about it. When the price is overextended, right, what are we going to expect? For it to be able to go back down to its average. When the price is oversold conditions, right, the price is extended downwards, what are we going to expect? For it to go back down to its average. And then the walking period, right? Strong upward momentum. The price is riding along the upper band. The trend is strong. Don't fight it. The band squeeze is that the bands contract. Here's the tight range, meaning low volatility. Market is consolidating. Prepare for a breakout of direction is unknown. Whenever you see that tight squeeze here. And remember, we saw it here, right? We saw a literally, fam. We see that squeeze right here, right? So the squeeze happened, and this is not always the case, and it broke out into a bullish trend, right? Sometimes we see a squeeze and it breaks out to a bearish trend, but we're seeing a squeeze right here for QQQ. Literally, you see the squeeze happening, fam, and it's able to break out to its upward or bullish trend. So here's the current SPY again for y'all to be able to see, and here's the last 10-day positions. And here is the visuals for SPY so we can actually see. So let's go ahead and take our quiz. So the upper band touches we had on the 5th, the 6th, the 7th, the 8th, and the 9th, right? So oversold territory, right? Overbought, excuse me. And then we had the lower band touches for oversold territory, right? So we had a lot more FOMO than panic throughout these first couple of days of the new year. So when the price is touching the lower band, this suggests that overbought, likely to fall further. Oversold, potential to bounce, right, or strong upward trend. Now remember, oversold, the lower band is going to be oversold, so we're expecting a potential bounce. So let's go ahead and put B. The walking bands, right, walking the bands, that's funny, Means that the price is what? Stuck in the middle doing nothing, consistently riding along the upper or lower bands, excuse me, a strong trend, or bouncing between the bands rapidly, right? So it's going to be walking between the upper and middle bands. And then bands are very narrow, they're squeezed together. What's going to happen? A volatility is low, consolidation is happening. Volatility is extremely high, or the market is trending strongly. So volatility is low and we're expecting consolidation or breakout to be able to happen. So this is where we're going to cap this off for our Bollinger Bands video. If y'all do have any other questions, comments, or concerns, please let me know. It is your boy Creative. If you haven't done it already, I need you to go ahead and like and subscribe to the video, because if you liked it, that means others will too. So I appreciate y'all. This is your boy Creative. I will be back at it again with another episode.